appreciate Councilor Mosher stepping up to fill the role. Welcome, everyone. This is the Audit Committee meeting for September 23rd. Before we start, we do want to acknowledge that we are on Mi'kmaq, the ancestral and unceded territory of the Mi'kmaq people. I guess the first thing we'll do is we'll look for a motion to approve the agenda. Oh, okay. There you go. Well, because you don't, we'll have the mayor move the motion, seconded by Councilor Birtles. All in favor? Opposed? Great. Motion approved. We only have a couple of items here today. The first and probably most important is, this is the meeting minutes. So we're going to approve those first. I should do that. Yeah. Meeting minutes of June 10th. Anyone else like to see any issues with those, or want to move the motion as written down? Okay, great. We'll get Stephen first, and anyone else? Deputy Mayor Mosher. Vote. Anyone? Let's see here. Yeah, that's it. I guess we'll vote to approve them. All in favor? Opposed? Great. Easy done. I'm just trying to get to this. I'm so excited to see the reports. Okay. So yes, the meat of the meeting today is the town auditor's presentation of the audited financial statements for 2021 and management internal control letters. So I guess secretary's office. Yep. I guess we'll look for a presentation then from our accountants. Good day, gentlemen. Sorry, I missed. Who's going to take the lead on this one today? All right. Well, I'll leave it in your capable hands. For this is being broadcast over Zoom, so if you're speaking, you can have a mic also.
Perfect. Well, thank you very much for having us here. I'm Michael Beliveau, partner at Beliveau Vino, would be the senior on the audit. Also, we had Luke Richardson on the audit as well. Luke can't be here today. And then I have with me Paul Beliveau, the partner in charge of the audit. Firstly, I'd like to thank the Director of Finance and the accountant, so Lisa and Kathleen, for their help during the audit. It was smooth this year. We've had challenges the last 2 years due to COVID, but everything has gone well on our end. Them and their staff are always helpful in anything we ask for or we're looking for. They're more than happy to help to make it an easy process on our end. So thank you very much for them. So the thought process today is to go through the statements here, and my approach today, I'm thinking more so is to kind of explain the statements themselves more and kind of what the meaning is there. I'm more than happy to answer any questions, concerns as they go through. So please, interrupt. So if something's at top of mind, we can address it and then move on. So starting at the package A1, which would be, I believe, the 5th page of the statement. So A1 is the management's responsibility for the consolidated financial statements. So this is just getting to the fact that these statements are yours. They're prepared by management and kind of the responsibility of preparing them, etc. They're not Beliveau Vino statements. They're the town of Lunenburg statements. We put the report on them, but the statements themselves are yours. Flipping to A2, which is the independent auditor's report. So we have audited the accompanied consolidated financial statements of the town of Lunenburg. In our opinion, these consolidated financial statements present fairly in all material respects the financial position of the town of Lunenburg as at March 31st. So that would be kind of, in layman's terms, a clean report. Nothing came to our attention throughout the audit. So it'd be what you're looking for year to year, that there was nothing from our end that would indicate the financial statements aren't materially correct. So flipping through to the A4, so this would be the consolidated statement of financial position. If you're used to seeing private company statements or not-for-profits, this would be the balance sheet. So there are a couple of things to focus on here. Your cash balance of 6.8 million compared to 5.6 in the prior year. Coming down, there's a net financial asset number. So about halfway down the page, it's 2.2 million, up from 1.3. So the net financial asset, what that means in short is if it's kind of almost like a working capital calculation that you would see in private companies. So if you were to use your cash and your receivables moving to cash and pay off kind of everything that you owe to people, that's what you would have left. And that would include your complete long-term debt. So that 2.2 number is nice to see. I think it would probably be 3 to 5 years ago. I believe at one point that would have been a net debt number, which would have meant that, you know, your cash and your liquid assets weren't enough to cover your liabilities at time. Now, it's important to consider there that brings in the total number of long-term debt. You're not paying off the full balance in the year. You could if you had to, but normally it'd be broken down on what you have to pay in that current year. So then going down from there is your non-financial assets. So that's your tangible capital assets. So that's all your buildings, your roads, your sewer, all of those things of the town. The inventory not held for resale. So it's recognized as a non-financial asset because the inventory you hold, it's not meant to sell. So you're never going to turn that into cash. It's bits and pieces that you have in public works that are going to be used to fix whatever breaks, kind of thing. And then your prepaid expenses. So those are expenses paid in advance. You know, there'll be your insurance. Sometimes you have specific projects that you've paid pieces into advance, which makes up the large portion of that number. And so then moving down from there gets you your net assets or your total municipal position. So this would be in effect your, you know, retained earnings. And it's broken down amongst the value of the investment in capital assets. So really that's taking the tangible capital asset number, the 38, almost 39 million at the top, reduce it by the amount that you owe. And then in short terms, that gets you what you're investing. That's the value you hold in those assets. You also have your reserve funds. So your reserve funds are what you've been using and transferring to from operations throughout the year. So that's what you have kind of restricted in a sense. And then your surplus of 724,079. That surplus number wouldn't be from operations as far as your town general operating fund. It would be whenever you have a surplus for your town operating, which we'll get to, it actually has to be transferred to reserves. Or if you had a deficit, you would have to budget accordingly the following year for that deficit. So that surplus is water, electric is where it's generating from because they're allowed to have a surplus if they have it. So A5 is the consolidated statement of financial activities, which would be your income statement. As you're going through the statements, there is a section B that we'll kind of touch on, but if you were comparing them, your assessable property taxes, that number is net of your education fees. We show it gross on your operating side because that's more so how you work. So during the year, your net revenues for the year exceeded expenditures by 1.8 million, leaving you at the position that we just talked about, your retained earnings. So your revenue pieces and why you generally see that, you know, what would be one could consider a large surplus at year end 1.8 is generally how your funding works regarding your capital assets. If you're able to secure funding, those revenues come in. But as far as the expenditure side of the things, you're actually only getting the amortization of the assets. So you've been fortunate the last probably three years mainly, but you know, generally over time that you've been able to receive significant amount of funding for your capital projects that you're doing, that the town is paying, you know, small percentages of the dollar. So that's why you're part of why you're seeing these large surpluses is relative to your ability to receive funding, mainly around the property and equipment. Moving to A6. So this is the statement of changes in financial position, otherwise known as your cash flow statement. So this is just breaking down, showing where your cash was spent for the year, where the cash came in, and overall you had the net increase of 1.2. So that's showing, you know, how we got to that number. Not a lot else there. And A7, this is the consolidated statement of changes in net financial assets. So that's that piece I talked about earlier of the net financial assets versus net debt number. This is just breaking down what makes up that number so you can see the ins and outs of it. Following that would be A8 through. These are your statement, your notes to your financial statements. So this is where we have any disclosures that are required. We identify the, you know, accounting policies used. of concern for the audit committee would be on A17, note 11. So this is a remuneration, training, hospitality, and other approved expenses. This is directly in the frame that it's something the audit committee is, required to kind of look at and ensure that's there. So that has the council and the CAO salaries, expenses, et cetera. And then it also has the hospitality expenses, of which there weren't any hospitality expenses during the current year. That would be the main piece of the notes. I move on to section B unless there are any questions, concerns on the consolidated piece.
Before we move on, I just quick housekeeping note to Heather. Was Councillor Sanford able to join us on Zoom today? Okay, thank you. All right, thank you.
All right, so I'll move on to section B. So section B is kind of, unfortunately, section A is what we audit. We do not, in the sense, audit section B. So these statements, and what that means is they don't necessarily have to comply with the PSAB accounting framework that the consolidated ones do. But in order to provide an audit opinion on the consolidated statements, we have to do work on each individual fund is kind of in practice how it works. But the section B would not actually be audited by Bella Bovino per se. Why they're provided here is I find they're useful in the sense that they're more so in that how council operates. You view the town of Lunenburg as an operating fund, an electric utility, a water utility, a cemetery. So when you're making decisions, there is an overall aspect to it, but generally you're making them within there. So we provide these statements so that you can kind of see how the operating fund did, et cetera. So B1 would be the statement of operations for the general fund. So this is kind of where I mentioned previously on the consolidated statements, the tax number is actually less on the consolidated statements because we take the gross and then we recognize in expenses down under fiscal services, the education board transfer. So overall for the current year, you had a small surplus of $1,091. That next year will automatically be transferred to reserves. So if you see at the bottom of the statements last year, you had a $361 surplus, and this year we moved that over into reserves. So not much else to touch there. B2 would be the statement of financial position, the balance sheet of the operating statement. And then just flipping through to B3. So B3 is the statement, the balance sheet, statement of financial position for the capital fund. So this is where the assets related to the town general fund are. So you have 26 million would be what the town general fund has as far as assets. Within that 26 million related to it, you have the debt number. So you have temporary borrowings. So what that means is those borrowings haven't just actually been converted into a debenture yet. I believe they have now. They generally happen in the fall. So that's just shown as temporary borrowing, and next year it'll be down as long-term debt. Yep. Yeah. So I'll flip you back to B2 just quickly so on the balance sheet, you'll see throughout it, you'll see due from cemetery fund, due from operating reserve, due to electric utility, water utility, et cetera. Those show up here on the consolidated statements. They disappear because if it's a receivable on the town operating side where they have a receivable from the cemetery fund would show a payable. So on consolidation, they net out because you're all actually just one organization. On B3, one spot would be the due to perpetual care fund. So you've actually, in effect, the perpetual care fund has lent money to the town of Lunenburg. You control the perpetual care fund. So in avenues over the course of the year, those loans and they are interest bearing, have been given from the perpetual care to the capital fund to fund some capital assets, and the money's been being repaid over time. So that's why it's broken out differently from the due to municipal finance corp. B4, so this is just showing how we get to your investment in capital assets in the operating fund. Main takeaway here is if you look for grants for capital purposes, kind of the middle section starting at the 589,000 going down, you can see that that's a fairly sizable number. So as I mentioned before, you guys have been very fortunate to receive various forms of funding. Major ones would be at the academy, but other projects also throughout the town. You and staff have secured funding to make it affordable for the town of Lunenburg and also provide benefits of the assets. Flipping through to B6. So B6 is just kind of a more deeper breakdown of the numbers from the income statement previously. So I'm not going to go through it really. If you have questions, I'm happy to answer it. One would be your deed transfer tax. Went up this year significantly. I think that's one for all municipal units was surprising. I think everybody had budgeted expecting a decrease when COVID hit, and I think everyone knows what's happened with the real estate market. So that's kind of one that you'll see kind of across the board of being up for most municipal units, which is a benefit during these times. So those go all the way through to B11, which gives you just the deeper breakdown. B12 is the cemetery fund statement of operations. The way the cemetery fund works is they always show no surplus or no loss. And why that is because the town, you'll see the appropriation from the town general funds. Essentially, the town covers whatever the loss would be. So this year the loss would have been 34,586. So that's what was moved over from the town. B14, this would be the water utility statement of operations. Not much to say here. Down at the bottom, you can see the dividend to town capital reserve. So the actual dividend this year increased from 50,000 last year to 65. So you're able to use that for funding within the town operating fund. And you'll see transfer to reserves kind of about 3/4 down the page, the reserve for land purchase. So this year the expense was 110,000 compared to 5,000 last year. You actually used up the reserves for purchase of land. So this was just a way of replenishing that for going forward, where you have the opportunity to do that this year. B16, so this would be the capital fund statement financial position for the water utility. So like I said, the town has one, town operating has one, water utility has one, and electric utility has a capital fund. So this is where you can see the breakdown of the assets that you have and the debt related to it. Why you see the 2 million of cash there, that's actually a result of the reserves as well in the fund. So you have capital reserves for land, as I mentioned, general and equipment, and the depreciation funds. B19, that's just a deeper breakdown of what makes up kind of the numbers on the financial the statement of operations. And then B20, so your electric utility statement of operations. So this is breaking down what went on in the electric utility this year. So you had a small surplus of $2,804. This would be your second full year or third full year with Nova Scotia Power operating. B22, so this is the capital fund statement of financial positions related to the electric utility. Similar to the ones before it, you have 2.8 million in assets, And then you have long-term debt of 600,000 related to those assets. And then you have your capital reserves also included there. So you have capital reserves, 922,000. So B25 is the perpetual care fund statement of financial position. So that's what I was referring to. The money was lent to the town with long-term debt. So this is where essentially the receivable side of those debts are. So you can see the various loans to the capital fund there and the related interest rate. B26. So B26 are your operating reserve funds, statement of financial position. So these are the operating reserves that you have, your streets and sewer, your recreation. New this year would be the safe restart. So those were funding received from the province that hadn't been fully spent at year end. Your LAF fund and your pro kids. One thing to note here is, so you can see how each under the assets, there's bank balance and then due from town general. Those are all transferred after year end. There's a requirement that your reserve funds actually have to be funded. And by that, they mean the cash has to be there. So if you're showing a balance of 55,000 for your reserve, you need $55,000 of cash there, or the reserve doesn't make any sense because it wouldn't actually be funded. So those numbers at the top, the 471,520, because we can't do it right at March 31st or know necessarily the number that's transferred, they actually just get transferred after year end so that you are funded. So the requirement in the FRAM is that those have to be done before next year end, which they have been. And they have been, I believe, since I've been here. I don't think we've ever had a year where the transfers weren't made. So B28. So these would be your capital reserve fund. It's the similar conversation to what we had on the operating reserves. Just when it comes to your capital reserve funds, there's a slightly more restrictions there. For example, gas tax. You're more restricted in what you can do with gas tax. In your operating reserves, you have a little more leeway of, if you decide you want to do X, Y, and Z with it, there's more leeway there to be able to do it. When you get into the capital reserve funds, there's more, this is only what it can be used for. There's specific projects, et cetera, depending on the reserve. B30 to B31, this just breaks down all the scheduled debt charges and long-term debt. So this is a breakdown of the long-term debt that you have and what it was actually used for at the time, and with the maturity date and the associated interest rates. B32. So this is for how you funded all your capital assets for the year, the statement of capital financing. So you can see you were able to secure federal and provincial funding of almost 1.5 million, contributions from other organizations of 491,000. So there's almost $2 million there of funding that was received towards your 3.3 million of capital assets for the year. And B33 is just kind of a further breakdown of where that went, whether it was used in town capital or water utility, electric utility, of where the capital assets were purchased and what funding was used to fund it. So I know that was quick and brief, but I understand that you're receiving updates throughout the year, variance reports. So I don't think the numbers necessarily should be of any great surprise to you. But I was just trying to give an idea of what the statements kind of mean in a sense. So that was my goal there. So if there are any questions or comments, I'm happy to answer, or I can move on to the letters.
First, I'll say thank you for the very comprehensive report, and I'll open up to the floor. Councilors, any questions? Just going to check with Susan, who's online.
Can you hear me?
We can. Hello, Susan.
Perfect. Hi. Took me a little bit to get in, but I'm here. And I have a couple of questions just for clarification. And I apologize because I couldn't see the page number. And I was trying to write the question at the same time, but you have two categories of miscellaneous. One was under non-operating and one was under net operating. I'm wondering if you could help me understand what is miscellaneous?
Do you know the statement you're looking at? So I can,
No, it was B something. And again, I apologize, but I was trying to write and look.
We'll need you to speak in the microphone. She can't hear you. Councilor Sanford, we're just locating the page you're talking about right now.
No problem. If it's any help, I think the miscellaneous amount under non-operating was upwards of maybe 80 some odd $1,000, while the miscellaneous under the net operating was in the $20,000. And they were probably about maybe 3 screens apart between the two displays.
I think Ms. Dagley has an answer for us.
Oh, sorry, my apologies. If Councillor Sanford if she's looking at the electric utility statement on B20, some of those miscellaneous items are like the 69 kVA line lease, but certainly it may be easier if we locate the actual statement that we could give her a greater detail, and we could certainly provide that then to all council if that was helpful.
That would be fine if it follows up later. Thank you.
so for the electric, so on B20 for the electric utility, there's miscellaneous operating revenues of 32,752. So that would be made up of mainly the largest balance of it are pole attachment fees. And then the miscellaneous down under non-operating revenues of 22,772. Those would be sale of service. Those are kind of wiring jobs, one-off type of wiring jobs that you would have. So those would be those type of revenues. They would be put in operating revenues if they're kind of a continual thing and really part of the operation. So, using the electric utility as an example would be the pole attachments. Those are happening every year. Director of Finance generally has a pretty good idea of, year to year it's consistent, where the wiring jobs, are more of a one-off. You're not relying on them for operate, like you don't need them to operating. They're kind of outside the scope, but as they come up, you do them, but it's not necessarily the day-to-day operations of. So that would be kind of why we would break out kind of your revenues as operating revenues would be day-to-day, these things, and then the non-operating, for the most part, it's interest and other things, but kind of those one-off things that happen that you wouldn't, you're not necessarily budgeting for in any great way. That would be kind of the explanation, but I don't know if I don't think that would be the statement you're necessarily looking at, is it? No.
It was one of the statements. It was one of the statements.
Sorry, I really couldn't hear what Councillor Sanford was.
She was saying it was one of the statements, I believe.
It was one of the statements.
Yeah.
I thought it was. My goodness. We can certainly, go through and do a review to see if there's other ones, but it's, sometimes when those miscellaneous ones are just because they're little small ones that we collect up rather than have a separate category. So it just takes us a bit to give if you want to get all the breakdowns of those. That's why I was suggesting a follow-up with an email.
Okay, thank you so much.
Okay, that works for you, Councilor Sanford. Thank you. Do you have any further questions?
I'll take that as no. Anyone else on the floor? I do have one question myself then. I apologize, I'm digging through here trying to find out where I saw this, but I believe, Mr. Bell, at one point you mentioned talking about the water electric revenues, a surplus of $724,079. I just want, obviously that seems like an awful lot of money. People are going to look at that and say, are we charging too much for utilities? I don't know if this is a question for you or perhaps Ms. Dagley, but perhaps we could just discuss why we have $700,000 in surplus.
So those are accumulated over time. So like they would be from the history of the beginning of both of those utilities. Really essentially the electric utility has about $500,000 and the water utility has about $250,000 there. Some of those are to allow for the working capital that is needed to actually run that fund. And so those are what those are established for. Anytime that there is a surplus, we always look to see whether it should be transferred to a reserve or to see if it's something that needs to be retained by the utility in order to have the working capital that it needs to carry on its functions. So that's what those are.
I just didn't want to have to hear about it down at the coffee shop later. So that's great. Thank you. Exactly. If there's no further questions, we can continue on with the letters.
So I'll start with the management letter. So this is just a letter we provide that's kind of outside the scope of internal controls pieces, but just kind of give an idea of what we do for our process. And if there's anything really that came to our attention that, we just think is worthwhile to let you know. One piece we always go over is during our audit process, we do make inquiries of management employees to determine if they are aware of any fraudulent or illegal acts carried on by any of the town employees. And management has advised us that they were not aware of any such acts. The only other piece really to touch on would be paragraph 4, just alerting you to what last year on the financial statements was a contingent liability note is now a subsequent event note in the financial statements as the issue has been resolved. It just hadn't been resolved as of March 31st. So we still wanted to recognize to users in those statements that it's been resolved and there was no financial liability to the town. The second letter we have is the internal control letter. So as part of our operations, we examine your internal controls as a town, and within that, if we identify any weaknesses or any issues, we bring it to your attention. We can provide recommendations, but also within this letter, the town and management are also allowed to provide their response to it. So this year, as you can see, we have the email authorization and confirmation, and I debated on whether to put it into the letter as, it was a minor weakness that was picked up and caught, but through the history of dealing with the town of Lunenburg Council Management Audit Committee, you have strong internal controls, and I've reviewed enough expense reports that have, changes for $1.50 because it wasn't within the policy that I figured with that standard that you've set that it was worthwhile to bring to your attention. But the main piece to it is working from home or working remotely. There were times that approval has to be given remotely. So it was an email that was sent, please approve X document, please approve the attached documents. The information we looked at as auditors, it has the email, it has all the documents that presumably would be attached to it. Behind it, the support is all there. From an audit perspective, there's no way for me to actually confirm that when you write, please approve these attached documents, that those attached documents are the ones actually printed. So it's a minor way of thinking about it, but in theory, anything actually could have been attached to it. So talking with management and the team, and you'll see the response there, really the main request to it is when you're doing, please approve attached, is to just add some details that would indicate what attached is. So if the invoice number, the supplier, whatever have you, that identifying characteristic, so that email can't be used for another purpose of saying, well, who's to say what was actually attached, or you would be able to go back to the physical email to see it at some time, but it's just, might as well close that loophole more so that anything was the thought. All the support was there. It was just nothing we could actually confirm ourselves. So we figured to draw the attention and everything from our perspective, and you can see the response is that the policies have been implemented going forward, that I don't foresee any big issue there. It was just something we felt to bring forward to council or to the audit committee. So that's all I have, unless there's.
I guess I was just going to add to that, if you didn't mind, Mr. Chair. Just to say that particularly that was with mobile devices, like we have electronic signatures, obviously, that we can use, but sometimes when you're working over multiple platforms, and particularly with your mobile device, that was challenging. But we've certainly had, discussion with the Fuller management team and just asking those. There was already an issue that we had identified as well. Like after the first couple, it's like, oh no, this needs to have more detail to have that there. But we just confirmed it with everybody so that they know, just to add those, so that when Michael's looking next year, he will have all the documentation he needs.
We appreciate your thoroughness. That's excellent. I believe that sum up the rest of the report then.
Yeah.
Well, thank you, Bella Bovino, for another very comprehensive audit, and to our finance staff who worked very diligently to prepare this for Bella Bovino. I will open the floor. Are there any further questions from councilors? Deputy Mayor. I knew we were not going to get away with that.
Not just out of curiosity, Michael, would you have audited one of those instances where you saw the electronic thing, out of whack?
It was identified in our audit work. I didn't feel it wasn't required for myself to go to actually find the email. But it also wasn't significant enough to feel that it was a large issue. We probably came across it several times in what we were doing as far as the audit work. Had there been not the pile of paper attached with it, would have been of greater concern. But so that's why it came to, that's part of why it came to our attention, is we found like it wasn't something we were necessarily looking for per se, but it came to our attention when through our audits. So that was a discussion with Lisa and the team. So there wasn't overly, I wouldn't say it wasn't a large concern or risk, but it was just worth identifying and making sure there's a policy in place more so.
If there's nothing else, moving to the agenda, I see we have no new business. We have a proposed first meeting for 2022-23 on June 2nd, 2022. And with that dealt.
You need that one motion in there. Mr.
What's
Chair.
right with the motion? Oh, I missed the motion. Thank you. Appreciate it, Ms. Dagley. I'm so excited about it. Anyway, the motion, we need to move and second to receive and authorize the mayor, CIO, and finance director, why I picked up on this, to sign the audited reports for 2021. Can we get a motion to approve? Okay, everybody's in it. Let's get the mayor and the deputy mayor to move it and second it. All in favor? Done. Noting Councillor Sanford in favor as well. Motion passed. There we go. So no new business. Our next meeting date, as I've mentioned. And with that, we stand adjourned.
Bye, guys.